Alright, let's talk about something that is absolutely changing the game for making money. It's the idea of earning an extra $1,000 a day. Now, I know what you're thinking. That sounds like an insane amount of money, and for most people it is. But what if I told you that a new wave of technology is making this income more accessible than ever? We're not talking about starting a massive business or working 100 hours a week. We're talking about leveraging the power of artificial intelligence, or AI, to build a side hustle that could, potentially, work for you even while you sleep. It's a fascinating concept that deserves a closer look. The world of side hustles is evolving at a breakneck speed. Gone are the days when your only options were delivering food or driving rideshare. Today, the digital landscape offers opportunities that were pure science fiction a decade ago. You can use sophisticated programs to help you make smarter decisions, especially in the complex world of investing. This isn't about getting lucky with a single stock pick. It's about data-driven intelligence to build a consistent, scalable income stream. Turn your computer into a partner that spots opportunities you might miss. This isn't a get-rich-quick scheme. It requires knowledge, strategy, and a bit of starting capital. AI lowers the barrier by automating research and execution. So, what is this AI investing we keep hearing about? It sounds like sci-fi, but the core concept is straightforward. Imagine you're deciding which stocks to buy. You'd review past performance, earnings, news, and the broader market. That takes a ton of time and effort. AI is a very smart program that does this research at massive scale. It can analyze millions of data points in the blink of an eye. Think of AI as a super-powered financial analyst that finds hidden patterns. It connects seemingly unrelated dots to forecast small edges. It helps decisions be more informed and less emotional. On one end, robo-advisors that build and manage a diversified portfolio for you. On the other end, high-frequency algorithms capturing tiny price moves. For a side hustle, we want powerful but accessible tools. AI aims to remove the emotional roller coaster. It runs on logic and probabilities, learning from history to boost long-term discipline and consistency. Now for the exciting part, the actual tools that make this happen. You don't need to code or own a supercomputer. AI trading bots connect to your brokerage. You set rules. They execute 24/7. Platforms scan for setups and can automate execution based on your criteria. Advanced analytics tools don't trade for you. They give you an analytical edge. They analyze chart patterns, evaluate fundamentals, and assess sentiment. Set alerts, then use data to make confident decisions. Robo-advisors manage long-term portfolios, rebalance, and optimize taxes. Keep core retirement safe while using separate capital for higher-risk trading. Crypto bots can run grid or DCA strategies in a 24/7 market. Key takeaway, a spectrum from set-and-forget automation to decision support analytics. Choose based on goals, risk tolerance, and how hands-on you want to be. Okay, theory and tools are great, but let's talk real-world results. Does anyone actually make this kind of money? The answer is yes. And here's how. Alex, a software developer from Texas, liked trading, but couldn't keep up while working full-time. He dedicated about $10,000 to this side hustle. Subscribed to an AI analytics platform that flagged high momentum and unusual volume. He didn't let AI trade for him. He built a small watch list, 3 to 5 stocks. Focused on short-term swing trades, holding a few days to a week. AI found ideas. He spent 30 minutes each evening reviewing and placing trades. Early on it was about $50 a day, then around $100 a day. He improved at interpreting signals, managed risk better, and grew his account. After 18 months of compounding and refining, some days crossed the $1,000 mark. Consistency. Using AI as an assistant, not a magic money machine. So, you're interested and want to get started? Let's break it down. First and foremost, education. Learn the market, stocks, options, and crypto. Understand orders, risk management, and diversification. Watch videos, read books, follow financial news. Don't rush, build a solid foundation. Step 2, define your strategy and choose your tools. Hands-on swing trading or automated bots. Research platforms. Use free trials and paper trading to test risk-free. Don't lock into expensive annual plans yet. Step 3. Start small, only with money you can afford to lose. Your early capital is tuition. Learn and refine before scaling. Track every trade. What was the setup? Why enter? What happened? Review weekly. If profitable for 1 to 3 months, add capital slowly. Treat it like a business. Analyze, improve, and scale deliberately. The biggest mistake? Unrealistic expectations. It often takes a year or two of consistent effort. Chasing instant riches leads to oversized risk and blown accounts. Aim for rubber 1% per week. Focus on process. Another pitfall? Blind faith in AI. It's a tool, not omniscient. AI can't foresee unforeseen events. Do your own due diligence. Pro traders risk only 1 to 2% per trade. Protect longevity. Always define max risk and set stop losses. Don't hop strategies weekly. You'll pay in fees and never master one. Stick to a well-researched approach through cycles. Mastery beats novelty. Process beats impulse. Set realistic goals. Execute with discipline. Review and improve. First, market risk. Markets are volatile and unpredictable. AI can't eliminate risk from crashes or prolonged bear markets. A good system might drop less, but it's not immune. Second, overfitting. Great backtests that fail live. Correlations without causation crumble in real markets. Be skeptical of flashy backtests. Security. API keys let services trade for you. Protect them. Use reputable platforms. Enable two-factor everywhere. Never grant withdrawal permissions. Regulatory risk. Rules can change quickly. Expect evolving requirements for platforms and users. Another reason not to pin all hopes on one AI strategy. Approach AI investing with safety and responsibility. Diversify. Don't put all money in one bot or strategy. Keep an emergency fund and contribute to broad index funds. Treat AI trading as speculative capital. Maintain oversight. You are the manager. AI is the employee. Schedule reviews. Performance, logs, and market conditions. If volatility spikes, reduce size or pause. If AI behaves oddly, intervene immediately. Be skeptical of hype, guarantees, and secret algorithms. Prefer transparency, risks disclosed, and verifiable history. Markets change. AI evolves. Keep learning and adapt your strategy. Long-term success. Be smart, informed, and responsible. So, is this side hustle actually right for you? The potential is attractive, and with tools, strategy, and discipline, it is possible. However, it's not for everyone. You need capital, the right temperament, and a willingness to learn. It's not pure passive income. It requires management and continuous education, and a stomach for volatility. Best for those who are analytical, patient, and disciplined. You will have losing days and weeks. Stick to the plan, avoid fear and greed. If this isn't you, there are simpler paths like low-cost index funds or other side hustles. AI has leveled the playing field, giving retail powerful analytics. The journey to $1,000 a day is a marathon, not a sprint. It's paved with learning, discipline, starting small, and meticulous risk. If you embark, do it eyes wide open. Research, respect risks, use AI as a powerful but imperfect tool. Thank you for watching. If this helped, tap like and subscribe for more.